Hi everyone, so here is the 100-year history of gold, and on this video I am going to help you understand why is it that gold prices rises, why is it does it fall, and we'll talk about some recent historic episodes. Why is it that I'm waiting for a 20% price correction on gold and only then I will enter. I'll give you a complete macroeconomic breakdown of this complicated topic in simple, easy to understand language. Let's jump right in. And here, what you will see is that you will see some periods where gold prices suddenly goes up. For example, this is a phase. Let's call it phase 1. Here, gold prices went up. This was second phase. Here, gold prices went up again. This was third phase. And this is the fourth phase where gold prices are going up. Now, why did all these phases happen? Because there was some kind of crisis. So this was the depression crisis. There was 1930s depression. So gold prices went up. This phase 2 is the inflation crisis, that in the US, there was massive inflation. This was also the period when the US government depegged the world away from the gold currency, because between 1930 and 1970, we had somewhat of a fiat plus gold standard. But after 1970, we were completely on a fiat standard. What it means is that countries like India, Japan, US, European countries, they could all print as much money as they liked and they didn't have to back it up with gold. So this end of gold standard happened in the 1970s. So this was kind of a macroeconomic crisis and gold prices went up again. 2000s, we all know that this was the dot-com crisis, the tech bubble crisis. Again, the gold prices went up like crazy and we are here, right, after 2020, and 2020 was the COVID crisis, and here gold prices went up. So very simple understanding that, okay, why do gold prices go up? Because there is some kind of crisis happening in the world. Now, the crisis could be a war. The crisis could be government printing excess money. The crisis could be a bond currency crisis. On top of that, what has happened? There is another layer of crisis that, okay, Donald Trump has gone rogue. He has gone mad, right? And he is doing a bunch of BS in the economy. On top of that, there is still Russia-Ukraine war, which is happening. So a lot of complications have come up after 2020, and as a result, gold prices have been going up. So we are sitting here in 2025, now almost 2026. So do I see this chart running up, or is there a possibility that it could correct? Now see guys, I'm not an astrologer. I can't say whether it will go up or it will go down, but there is no reason why I would be running to chase gold. And why is that the case? So for this, you need to understand the fall history of gold. Now, what is the meaning of fall history of gold? So abhi tak we understood the rise history of gold, that okay, gold has been going up, great, money is being made, vagera, vagera. But why is it that gold price is correct? So let's look at the last three major drawdowns of gold, right? So for example, you will see that, okay, gold corrected in this phase, gold also corrected in this phase 2, and gold also corrected in this phase 3, right? And these were all of these three were more than 20% falls. For example, if you consider this 1980 fall, gold was trading somewhere here, right, almost 700, right, and here it fell to like whatever 350. So this was a more than 50% correction on gold. So point to be noted is that, can gold prices correct? 100% yes, gold prices can correct. Can they correct by a lot? Again, 100% yes, they can correct by a lot. Now let me go deeper into all these 1, 2, 3 phases, the last three major drawdowns in history about gold. Why did the gold prices fall? And can we witness something like this in 2026 or 2027? So let's study phase 1. So in phase 1, the price peaked somewhere around 1800. And this was in 2012, and by 2017, it went down to 1100. So this was a healthy correction on gold. The prices corrected by a lot. And also you lost a lot of time. Please remember this. Okay, so now natural question that, okay, why is it that the prices corrected in this phase 1? So the reason for this were twofold. Number one was that after 2008, so we are somewhere here in 2008, the gold gained a lot of steam. Post 2008, why? Because 2008 was a crisis and the US government did something called as quantitative easing. In simple words, they dumped or printed a lot of money in the economy. Something very similar happened in 2020 also, that the governments printed a lot of money and gold prices went up again, right? So this was a phase when gold did exceptionally well, and by 2012, one could argue that 2009, 10, 11 and then by 12, the economy started to stabilize. So the policies around the economy finding some kind of stabilization. Okay, now can something like this happen in 2026? Yes, if there is a resolution to 2026 trade war. For example, if US stabilizes the situation, see, we threatened everyone, we're sorry about that, now let's go back to the old world or whatever it is. Now you can argue that, okay, no one trusts the US and this, that stuff, 100% agree. But in the short term, gold will definitely correct if there is some kind of policy stabilization. Now, why would that happen? Because it would lead to stabilization of US dollar or strengthening of US dollar. Right now, what is happening in the market is that the US dollar is collapsing, and it can be seen from DXY. So this indicates the strength of the US dollar. So let me take you to that chart. So we are looking at the monthly candle so that you understand the trend. People think that, okay, US dollar keeps collapsing. No, it's not like that. Yes, the buying power of US dollar keeps coming down in comparison to gold. But DXY is the strength of the US dollar compared to other aggregate currencies. So sometimes it strengthens, sometimes it goes down, sometimes it strengthens, it goes down, strengthens. So this was the strengthening phase of US dollar. Now it has come down. Now I don't know how much lower will it go or whatever it is, or it might rebound from here, who knows. But this is the pivot point. So we are standing at a very strong pivot point, and there is a good possibility that the US dollar will get strengthened from here. Now, will that 100% happen, not happen? No, we can all run our projections and I'll help you understand my projections there. But I do feel that US dollar can get strengthened from this point. So, okay, now let's go back to phase 2, right? So this was phase 2, I would say. And I'm just showing you like a micro phase here, and we will study this also. So this was in 1996. So the gold prices were somewhere around $400 and it came down to almost 275. So kitna ho gaya? 1/3 correction. So 30-35% fall had happened, right, in this time frame, 1996 to 2000. Okay, so this happened again due to two reasons. The number one reason was that between 1996 and 2000, the US economy was growing at a massive pace. Or in other words, US economy was showing sign of strength. Why was this the case? Because a lot of tech companies, tech mania was there, a lot of funding was being pumped up, economy was moving fast, the economy was going in an overheated zone, the US stock market was doing exceptionally well, etc., etc. People started diverting money from gold to stocks. So this was one. Second key point, that the government started selling gold. Now, this is a point that we do not appreciate much, because if we go and study this phase, what has happened in this phase is that a lot of governments, not necessarily the US government, but other governments like China, India, etc., we have started buying a lot of gold. Now, as a result, the demand of gold has picked up. Why? Because the governments want to make it a part of their treasury or increase their exposure to gold. Now, in case some governments decide, for example, the US government decides in 2026 that, you know what, we need to handle the gold situation. What could they do? They can sell gold from their treasury. Now, whenever massive spike in gold selling comes, the gold prices again correct. Now, is this a possibility in 2026, 2027? My assessment is a strong yes. That can happen, okay? But again, point to be noted is that these are estimates, and I'm just helping you understand the reason that US economy started doing well. Can US economy do well in 2026? So that's again a big question mark. My assessment again is a yes. Now, why is that the case? Because I've been harping on the fact that US economy can do well. See, what is happening in the US economy is that there is a very clear pivot and a war going on between China and the US regarding AI supremacy, semiconductor supremacy. Some companies are going to change how business or tech stacking is done fundamentally across the globe. Now, again, we need to look at it from a historic point of view, that if you go and study companies like Microsoft, Meta, Google, what have they done? Well, they have built some kind of tech stack. For example, you have Google Maps, you have Google Cloud, you have Google emails, etc. That's a tech stack. This has been exported to almost every country on earth, okay? Now, something similar, or these business models now will get disrupted due to the evolution of AI and AI becoming better as an alternate. Now, either US companies or China companies are going to win this war because their balance sheet is very strong. They can pump a lot of money. And as a result, the US economy can improve in 2026 and 2027. In fact, I'm betting on it. I have put in a lot of money of mine into these type of companies. They are doing exceptionally well. In case you are interested in learning about US stock investing, definitely consider checking out my global investing community. I build a live portfolio. I show it to my students. We have been doing exceptionally well. Here are the returns. Feedback has been excellent. So in case you want to learn, definitely join that. Okay. So, okay. So I hope that this point is clear, and the point to be noted is that in 2026, again, the US government can sell gold. The US economy is likely to thrive because they can't afford the US economy to slack. And this is a point that people are not getting. Right now, people are betting on the fact that US economy will collapse. But what if you're wrong? And if you're wrong, in that point, gold is going to correct quite aggressively. And how will this transpire? What exactly will be the trigger? Okay, the trigger is something called as corporate earnings, right? So corporate earnings means that every 3 months, companies like Microsoft, Nvidia, Tesla, they post their earnings. And if the aggregate corporate earnings keep going up, then people will start believing that, okay, you know what, there is possibly nothing wrong, and let us go and buy stocks now. So this second phase is what I feel is likely going to happen or play out. Maybe it will not play out in 2026, it might play out in 2027, 2028, but this is a very likely scenario, okay? Now, this was phase 3. It started somewhere in 1980, and one could argue that this lasted till 1993. And the price of gold corrected from 662 all the way to 352. Again, 30-40% correction. So very healthy correction again. Now, why did this phase 3 transpire? Now, this was the inflationary phase, right? So, for example, this phase that you see when the gold prices went up. So, in 1970s, the US government decided to depeg gold from its US dollar, right? So before that, the system used to be that to print $1 into the economy, the US government used to keep some reserve of gold in their tijori or locker, okay? But they said that, okay, this system is gone, we are not going to do this. So we are depegging from gold. Right now, it's a complete 100% fiat standard. You need to trust the government that we will just do a good job, right? And as a result, what happened was that there was massive inflation in the economy. And there was a Fed governor, his name was Paul Volcker. And what he did was that he increased the interest rates when he increased the interest rates here, right, at this point. And as a result, the gold collapsed. Now, why did the gold collapse? Because when interest rates go up, what is the meaning of that? That US denominated bonds or FD rates in the US will go up too. Now, if people are thinking that, okay, US bonds itself are paying me, let's say, whatever, 7%, and gold is paying me 5%, why should I stick with gold? So they will move safe money into other assets, right? So that's one way of looking at it. A lot of corporates are made to buy government bonds. So they run out of liquidity to buy gold. So a lot of forced buying can also happen, right? But long story short, in this phase 3, what had happened was that inflation was already very high, right, during this phase. So to curb inflation, the Paul Volcker committee, it came and increased the interest rates. And with the increase in interest rates, the gold prices corrected. Now, what we have studied is the macro history of gold. Now, let's study the micro history of gold. For example, if you take a look at March 22, gold has touched 1950 and it fell to 1632. Okay, so now this is fairly big fall. This is what 15% fall. Okay, now again here, April 2023, almost $2,000. And then it fell to $1,850. So there are micro corrections in gold. Now, why did these corrections happen, right? This correction and this correction. Well, long story short, because there were news of stability that had emerged. For example, some kind of deal can be reached between Russia and Ukraine. So there was a possibility of an end of war. Similarly, you would have seen that the US government has raised the bond rates or long-term bond rates. So as a result, some money started flowing there. There were also times when US dollar strengthened. For example, again, if we take a look at the US dollar strengthening, so you will see that between this in 2023, late 2023, there was a clear spike in DXY that the US dollar had strengthened. So what is it that you need to keep in mind going into 2026 regarding gold? Number one, please understand that gold prices can fall. We are at extremely bullish phase when you start seeing news anchors start making gold videos, when you start seeing every person talking about gold, you can very well understand that we are in a euphoric rally of gold, right? So this is the simplest asset to understand. Everyone wants to own gold because people don't really understand Bitcoin. So they might be averse to getting into Bitcoin even when it is giving a rally. So what would be the trigger point of gold correcting? This is the most important point that you need to keep in mind going into 2026. So my assessment is that as US stock earnings or corporate earnings improve, then what typically happens is that a lot of money moves from gold into the stock market. Natural question comes that, hey, you know what? Gold is at an all-time high. US stocks are at an all-time high. So what might happen? Okay, so here is where the story gets a little bit complicated because almost never in history gold and stocks have been neck to neck. Okay, so this is the first time that this is happening. So this remains to be seen that how would this exactly play out. But in the stock market, what ends up happening is, and this cannot happen in gold. So let me start with gold. See, in gold, if gold has hit an all-time high, there is no subcategory of gold. Okay, gold is just gold, right? But if you go to the stock market, right now you might see that Nasdaq has hit an all-time high. S&P has hit an all-time high. But if you start looking at mid-cap and small-cap companies in the US, they have not necessarily hit an all-time high. They have been on a consolidation phase for the last 4 or 5 years. Now, if for some reason money starts pushing into the market, my hypothesis is that small and mid caps in the US are likely to do exceptionally well, which they have not done in the last several years. Now, it's very difficult to pick these small and mid cap companies. I have built a portfolio. I will continue to build new portfolios in this area. That's a structurally different bet. But honestly, that is where money is to be made. If you think about it from an opposing point of view, that going in 2026, you are buying gold. Okay, what are you betting on? You're betting on a weak US economy. That might not happen because everyone has already bet on it. That's one. Second, you are betting on the fact that US dollar will collapse. Well, almost everyone has already betted on it. You might be thinking that corporate profits will not improve. Well, what if they do, right? So that becomes a trigger point why gold prices could fall. And on top of that, if the macroeconomic stability comes back, now why would that come back? Because the trade war or the US-India trade war could end. A bunch of other trade wars that US has recently engaged into will end. That will 100% happen because it is hurting the US also. So that will happen. It will most likely happen in 2026. So whenever these type of news comes, the gold will correct. So this is the reason why I'm not chasing gold. I'm not even putting 1 rupee into it right now. If I get to buy it 20%, 25% cheap, I'll think about it. But there is no rush for me to go and buy it right now. On top of that, there are a lot of pockets of opportunities now emerging in the market, be it like Indian large caps, which are somewhat at a discount according to me. Small and mid caps in the US, they are at a discount. So these type of opportunities are still available in the market. So as profit booking happens on gold, there is a clear rotation of money that could happen into these type of sectors. I hope that you enjoyed this analysis. If you did, do press the like button and I'll see you soon.